To those of you who have joined the ASP Isotopes webinar, this is the ASP Isotopes webinar to be starting at 4:15 p.m. U.S. Eastern. That is in about 3 minutes. Continue to hold, please, and thank you for your interest in ASP Isotopes.
Hey, can you hear me?
Loud and clear, Paul. Can you hear me?
I can, yes, that's great.
Excellent. We will get started at 4:15 U.S. Eastern, if that's all right with you, Paul.
Yep, that's perfect.
Good. I'll lead off with the safe harbor, introduce the call a bit, and then give you the floor. Then after you have given the presentation, I will explain to the participants how they can reach you, and then we'll take questions and we'll wrap up.
Perfect. Okay, I'll put my camera on. There we go.
Yes, I can see you, Paul. Yes. You may wish to put your deck up now, share screen.
How do I do that? Okay. And then,
and it is 4:15 Eastern. Yep, I can see it just fine. I suppose everyone else can too. It is now 4:15 Eastern, Paul, and with your permission, I will press record and get started.
Perfect, thank you.
Hello, everyone. This is Craig Brailsford with RedChip Companies. Thank you for joining today's event with ASP Isotopes, which trades on the NASDAQ under the ticker ASPI. With us today, we have Paul Mann, CEO of ASP Isotopes. We will begin with a brief presentation in a moment, and then we'll open the event for Q&A. I will keep everyone's lines muted throughout the presentation. Users, however, may ask a question at any time by using the Q&A tool at the bottom of the Zoom window. Later, when we have Q&A, you can use the raise hand tool, also at the bottom of your Zoom window, if you would like to speak to Paul Mann. Before we begin, please allow me to read the Safe Harbor Statement. This call may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. With that said, I now turn the webinar over to Paul Mann. Paul, please go ahead.
Thanks, Craig. Yeah, and thanks, RedChip, for hosting this call. So here's just some additional forward-looking statements and comments on industry and market data. So ASP Isotopes, what do we do? Well, we have a technology that allows us to build plants to enrich isotopes. And we'll come to what isotopes are in a minute, but compared to traditional isotope enrichment kind of centrifuges, our technology is much lower capital cost to build. It's faster. There's very few moving parts. Our plants are much smaller footprints and they're modulars. We can expand capacity pretty easily. In terms of our company, we set the company up about 18 months ago, and we acquired some assets in South Africa out of business rescue, and then we completed the plants. And our first plant enrichment facility was completed about 2 or 3 weeks ago. That should start producing commercial product around the end of this year, second half of the year. And our second isotope enrichment facility is expected to be mechanically complete, middle to second half of the year, and that should start producing product, towards the end of the year as well. And we have a large backlog of demand for new isotopes from a number of different companies and governments, and so we're talking to lots of potential customers. So in terms of what are isotopes, so isotopes are basically the same chemical but have different masses, different number of neutrons inside the nucleus, and that gives them different physical properties. And some of these physical properties can be used in certain applications. And separating isotopes is actually very challenging. You can separate two chemicals apart by just have different chemical properties, so they react differently or precipitate out of solution differently. But these isotopes have, same chemicals have the same chemical properties. We have to separate them by different masses. So if you look at this picture on the right, the M&Ms, basically we can separate, if you're blindfolded and you taste them, they all kind of taste the same, but you can separate them out by sight into orange, green, and blue. And we separate our isotopes by using different masses. And in terms of the value proposition that we present, let's just take an example of silicon. So silicon is basically sand. If you take a kilo of sand, it's going to cost less than $1. There's 3 isotopes of silicon, 28, 29, and 30. We have a kilo of just silicon 28. That can cost $600,000 a kilo. So we're taking something that costs less than $1 a kilo and something that's very expensive. Carbon-14 is another example. Take a bucket of charcoal, again, less than $1 a kilo. When we enrich carbon-14 up to 85%, that sells for $24 million a kilo. And so again, we're taking something that's pretty common and we're turning it into an extremely specialist material. There's very special properties that certain customers and certain clients can use. So where are isotopes used today? So there's a lot of isotopes used in medical diagnostic imaging for treatment of various diseases. Obviously, nuclear energy relies upon uranium to power nuclear power stations. There's many other applications in everyday life where isotopes are kind of used. And what's really exciting to me is a number of technologies in the future are really reliant upon isotopes. Quantum computing, for example, is unlikely to be possible without highly enriched silicon-28. There's lots of new advanced medical therapies and diagnostics and treatments that are coming to market over the next several years that, again, will require very specialist isotopes. And then, obviously, green energy and nuclear power is going to require lots of new isotopes over the next several years as well. So why do I think isotopes are interesting right now? We're seeing a real disruption and shift in supply at the same time where we're seeing pretty good fundamental growth in terms of demand. So let's look at the supply side first of all. When you look at one of the most common medical diagnostic isotopes, molybdenum-99, that's produced in 10 nuclear reactors around the world. It's a $3.5 billion market. And 9 of those 10 nuclear reactors are expected to shut down in the next 10 years. They've hit the end of their useful life. And so, it's a big opportunity there for us to bring molybdenum-100 or molybdenum-98, and that may help solve some of the molybdenum-99 shortages that the world is expecting to see in the next several years. The other thing is that Russia has been one of the largest producers and exporters of many isotopes. And given the current geopolitical events, many countries and governments and companies are questioning who they rely on as suppliers of what are often vital things to run industries and maintain industries. In terms of the growth, historically, medical isotopes have grown at kind of 4 to 5% per year, slightly higher than GDP, in line with traditional kind of healthcare growth rates. But right now, as I said earlier, there's a lot of new isotopes that are potentially going to be needed over the next several years. We have a lot of interest in molybdenum-100 and molybdenum-98 from radiopharmacies and other radioisotope producers in the medical industry. We've got a lot of interest in zinc-68, which is being used to production of gallium-68 for positron emission tomography scanning, and also it's used to produce copper-67. That's an emerging oncology treatment. Ytterbium-176 is being recognized as a better way of producing lutetium-177. That's an emerging therapeutic in oncology. Nickel-64 is being used as a radioimmunotherapy. And carbon-14 has historically been single source supplied from Russia. And again, there's a real shortage of that. And there's so all these isotopes are pretty interesting for us right now. I mentioned earlier, quantum computing is going to require much faster semiconductors and process qubits. And that's going to likely require highly enriched silicon-28. And there aren't really any Western producers of highly enriched silicon-28. When I say highly enriched, I mean 99.995% silicon-28. And then in terms of the future of energy, it's becoming clear that more nuclear power is likely required to meet climate goals and carbon emission targets for 2050. And right now, there's no Western producer of HALEU, which is the type of uranium that the new nuclear reactors are going to require. There's no Western producer of lithium-6, which is going to be required for nuclear fusion in probably more like next decade rather than this decade. And thorium-37 for molten salt reactors, which will be needed or likely needed around and towards the end of this decade. There's no Western producer of thorium-37 either. And so a lot of these isotopes fit right smack in our sweet spot. We really like lightweight isotopes, isotopes that are stable and non-reactive, non-radioactive. So here's a little sort of chart of isotopes that we expect to be producing in the next 12 months or so, and also isotopes we have interest in the future. We've already enriched silicon-28 in our plant in South Africa. We can do that. We're actually going to be hopefully producing carbon-14 towards the end of the year. I'll talk about that in a few moments. And then molybdenum-100 and molybdenum-98, we have a lot of interest in that from customers too, and we hope to be producing that towards the end of the year also. And then at the bottom there, you see some of the isotopes which are kind of in development or various stages of development. And we have a lot of interest from customers for many of these isotopes. So what's the first plant or first product we're likely to produce? It's probably going to be carbon-14. That plant you see there in the picture can actually produce the entire world's demand of carbon-14. It's not particularly big, and we started that plant up a couple of weeks ago. It's running really well. I'd allowed 3 months for commissioning, but it's already going. And for now, it'll emit oxygen-16. So again, it's a nice lightweight gas that is very similar to carbon-14. And towards the second half of the year, we'd expect to get our supply of carbon-14, and that's when we'll start enriching carbon-14. We signed an MOU with a North American customer for the entire capacity of this plant, and we're just fine-tuning the definitive supply agreement at the moment. But yeah, that's the kind of plants we kind of have, these small plants to produce highly specialized chemicals. I've mentioned Moly-100 and Moly-98 as large opportunities. This map shows a picture of the reactors, the nuclear reactors that currently produce the world's supply of molybdenum-99. And you'll see there the dates when they're anticipated to shut down. They're shut down because they're 50 to 60 years old. They hit the end of their useful lifetime. And as you'll see, the world needs to find a new supplier of molybdenum-99 over the next several years. I think the US has done a really good job actually of anticipating this, and there's a number of US companies that are preparing for this. The rest of the world, I think, is leagues behind the US. We recently signed a 25-year supply agreement with Ragan, which is a Chinese customer, up to $27 million a year of molybdenum-100, highly enriched molybdenum-100. And I think China's done a good job too, like the US. I mean, China has linear accelerators and cyclotrons that are ready to convert molybdenum-100 into finished products close to the point of care of the customer. And we expect to talk to a number of other countries and customers over the next several years to grow our opportunity in this industry here. And finally, silicon 28. We've already produced silicon 28 to kind of medium levels of enrichment. The plant you saw earlier for carbon 14 used to enrich silicon 28 on kind of a research pilot plant kind of level. It's not big enough for what we think our customers are going to want. So in the process of talking to customers about building a silicon 28 plant, and that will hopefully start producing products towards the end of this year. And we have a lot of interest from semiconductor companies and governments and other entities that are involved in the quantum computing space. Our process is ideal for separating light isotopes. So silicon 28 is kind of perfect. A traditional centrifuge, they have to add other elements onto it to increase the mass so they can use it in the centrifuges. We don't have to do that. We actually prefer lighter isotopes to heavier isotopes. So it's pretty unique, our technologies in that regard. Uranium is also becoming interesting again. For years it went through a pretty boring phase, and now I think people are recognizing that the only way to meet climate goals in 2050 is an increase in nuclear power. Many governments are trying to increase their share of nuclear power, and they've recognized that the shortcomings of relying on solar and wind. One of the problems for the world is that Russia is responsible for about 40% of global uranium enrichment, and the US imports over 90% of its uranium requirements currently. There's a big push from many governments to try and increase self-reliance on themselves rather than having to be held to external counterparties. The future of nuclear power is likely the SMR. One certain big driver of nuclear power is likely the SMR, the small modular reactor. There are many companies involved in small modular reactors. X-Energy and TerraPower are likely the two leading candidates, but there are 50 or 60 companies behind them. The US government, the DOE, has put about sort of $4.5 billion into these programs over the last several years and over the next few years. And these SMRs give us the ability to put a nuclear power station that's extremely safe, with very little waste, next to a city, a smaller city, and deliver energy to that city at 3.5 to 4 cents per kilowatt hour. And many of these cities right now are reliant on coal or oil or other polluting ways of producing energy at a very high cost. And this is a really it's a game changer for nuclear power. The slight problem with SMRs is that most of them are going to require a new type of uranium. Traditional nuclear power station uses LEU, low enriched uranium, which is enriched up to 5%. These new nuclear power stations are going to require uranium enriched up to sort of 15 to 19.75%. It's called HALEU, high affinity low enriched uranium. And today there's no Western producer of HALEU. So actually in the recent Inflation Act, government put $700 million into trying to encourage companies to produce HALEU, trying to encourage a domestic supply of HALEU in the USA. We believe our technology may be able to do HALEU with some modifications to it. We're talking to a number of companies and government entities about our capabilities here. This isn't the kind of thing we're going to do by ourselves. This is the kind of project that we'd want to have a partner involved in. The capex here is much bigger than other plants, and the regulatory barriers and the licensing barriers here are huge. And it's likely we would need help there with a company that's akin to getting through those kind of regulatory hurdles. So just a bit more on other isotopes where we have active discussions with potential customers for offtakes in new plants. I mentioned zinc 68 earlier. We have a lot of interest in zinc 68. It's currently being used in a cyclotron to turn to gallium 68. It's also used to produce copper 67. Chlorine 37 will be used in molten salt reactors, which are expected to come to fruition around the end of this decade. TerraPower is probably the most advanced here. And these companies will need tons of chlorine 37 if they're going to be able to produce if they're going to be able to build these molten salt reactors. But right now, there's no Western producer of chlorine-37. Talking to a number of companies about ytterbium-176, which is a pretty exciting. Lutetium-177 is a very exciting new oncology treatment that's emerging. The problem they have is getting lutetium-177. It's not the easiest of radioisotopes to transport around the world. Ytterbium-176 can be used to produce lutetium-177 almost at the point of care. So there's a lot of interest in ytterbium-176. Again, we're talking to a number of companies and a number of governments about ytterbium-176 supply. And lithium-6, in order for nuclear fusion to occur, probably more next decade than this decade, there was needed a lot of lithium-6 and also deuterium. And we'll see how that goes. But again, lithium-6 is a nice light isotope. It's kind of perfect for our process. So we've kind of put the company into two kind of divisions: ASP Isotopes and Enriched Energy LLC. ASP Isotopes are the plants that we're going to build by ourselves. We think we can build by ourselves. These plants typically cost $10 to $15 million to build. It take maybe a year to build. Cash payback is 2 to 3 years. Nice high gross margins. Not much in the way of competition or competing technologies. And so these are the plants. We're obviously, we've got 2 plants. We're going to enter commercial production in 2023. But we have a long backlog of other plants that customers are interested in. And then, some of the bigger isotopes, we're putting under enriched energy, and these ones will require, this is more for the energy fuel cycle, and they're going to require us to have partners, because we know our expertise, and our expertise is not in government relations and regulations and licensing. And it's likely if we had a partner who can help us through those corridors, that'd be a lot better for us longer term. So I guess my concluding remarks, first of all, our technology is proprietary and we feel it's proven. Our first plant is operational, it's working. There are favorable long-term market trends in this industry, good long-term secular growth, a number of new emerging demands for new isotopes that haven't really been required in the past. And most enriched isotopes are government entities where there's been little research done over the last several years. I said our first isotope enrichment plant, it is operational now. It started up a couple of weeks ago. The construction of our second, much larger isotope enrichment facility should finish in the second half of this year. Both plants should enter commercial production during 2H23 and should drive considerable free cash flow. And then, we've got a wide range of other isotopes to look at over the next several years. But priority number 1, 2, and 3 for the company right now is to get our first 2 plants producing commercial product and generate free cash flow. So I'll stop there and I'll take any questions.
Thank you very much, Paul. Participants can indicate that they have a question and that they wish to speak to Paul Mann by using the raise hand tool. I will then enable you to speak. You may also type in your question using the Q&A tool. Paul, is the recent private placement banked at $1.58? If not, are there any snags?
I'm not quite sure what you mean by snags, but as per our press release in 8K, the recent private placement was at $1.58. There's a warrant also attached to that with a $1.75 strike price. I'm not quite sure what you're meaning by snags, but yeah.
And the writer, you're invited to use the Q&A to elaborate on what you meant by snags. Are both plants fully funded?
So never say never until you know, but I think I would like to think so. So our first plant is operational. It requires minimal additional capex to get that to use a commercial product. Right now it's enriching oxygen-16. We're expecting the commissioning phase to take several months. It's taken a couple of weeks. So that's ready to go. Our feedstock will arrive in the second half of the year. Once we have our feedstock, that'll start going through the plant, and we have an MOU of a customer for the entire capacity of that plant. A second plant requires additional capex being spent on it. I'd like to think with the private placement we just did, that kind of gets us to the finish line for that plant, whereby it can start producing commercial product and start generating revenues. these plants are expandable. So when you say the plant finished, the finish line here is always moving, because the plant at a certain number of stages or segments can produce, let's say, 5 kilos a year. You add 2 more segments onto it, and then you can produce 8 or 9 kilos a year. And you can add some more segments onto it, and then it can produce 10 or 15 kilos a year, and so on. So you can always expand the plant, but I'd like to think with the cash we have on hand, we can get to the point where both plants are finished and capable of producing commercial product. Obviously, there can be upsets and missteps along the way. So we won't know until we get there, but most of the long expensive lead time items have been ordered. Most of the equipment is in our warehouse. There's not a lot of additional stuff to buy to finish these plants off. So I'd like to think most of the completion is within our control rather than not within our control.
Paul, what's your opinion on why the shares are getting a little bit hit today? And would there be any possibility of a short being one of the factors?
So I've actually got no idea why the shares are under pressure today. I've had a lot of investors phoning me up asking me why. People have been asking, are people shorting the shares because it's about to go below $1 or whatever? I've been trading equities for 20 years. When the cost of borrow on a stock is 139% and there's less than 100,000 shares available to short, which is what I saw this afternoon on the screen, I can't think shorting would be a very lucrative thing to do. But hey, I don't know, I'm afraid.
What is fully diluted today, and how much cash is in the bank?
So we haven't published our 10K, so I can't tell you what the cash on hand was on December 31. But our 10Q was published on September 30, so you can see what was published then. Since that 10Q was published on September 30, we raised $5 million in our IPO in November, and then we raised another $5 million in a private placement last week. So you should imagine we have a reasonable amount of cash on hand right now.
If the useful lives of these reactors are extended via investment, what does this do to ASPI's investment thesis?
So we actually believe we can compete very well against molybdenum-99 in the marketplace. Even if molybdenum-99 continues to be sold, we believe that using our molybdenum-100 in a cyclotron, you can produce technetium-99 at a fraction of the price of what you would pay for using molybdenum-99 today. So we feel actually that we have a large opportunity, even if the reactors currently do stay around. I'm not aware if there are any extensions or not. I know South Africa tried to extend the life of theirs. That's scheduled to shut down in 2030. They've just decided to build a new nuclear reactor, come on stream in 15, 20 years' time instead. So I'm guessing they're not going to be able to extend their license. I'd also point out that our plants are specific for a particular isotope, but with some minimal modifications, we can change them to do other isotopes as well. So there is some flexibility. For example, the carbon plant that we started up used to run some silicon, and we managed to reconfigure it, change it, take certain parts out, and add certain parts onto the balance of plant, and now it can do oxygen and carbon-14. So there is some flexibility in our production capabilities.
Do you need export or import licenses to ship product or receive raw material?
It depends on exactly which product we are talking about here. So, for example, molybdenum-100, when we import molybdenum hexafluoride gas, that's a pretty toxic, pretty dangerous gas. So there are some permits you need to be able to process it and handle it. Carbon-14 is actually radioactive, so we require certain permits to import and export carbon-14. Export of stable isotopes like molybdenum-100 and silicon-28, they don't really require the export permits. They can be shipped in a normal regular courier package type and shipped via normal methods. They're not radioactive. So that's one of the advantages of some of our products, is that they are stable, and we don't need a lot of the special handling you require with certain radioactive products.
To speak to Paul Mann, use the raise hand tool. I will unmute your line. You may also type in your question using the Q&A button, also at the bottom of your Zoom window. Stephen Ragan, please go ahead.
Mute. Yes, can you hear me?
I can, yes.
Excellent, excellent. So yeah, it's good to talk to you, Paul. This idea just came across my desk in the last day or so, and who I am is somebody who advises family offices, as well as just help out a lot of friends. I'm from the brokerage business in the past. We saw the private placement, which was very intriguing. We saw the discount that the shares were trading at $1.20, and of course we see the action today. I don't think it's shorting, because I don't really know how you would cover down here unless they knew where they could buy shares back. So I'm wondering, is there an overhang of stock from the past that maybe they have it so cheap they're just willing to ditch it here? Because I'm very surprised that people are willing to ditch it at this price. And I guess I'm asking your opinion, because you already stated that you didn't really know why. What do you think, though?
Yeah, so a lot of the pre-IPO investors are still locked up from the IPO. There's a 6-month lockup from the IPO. In particular, a lot of the early investors who got the founding investors who got in quite cheaply. I'd point out that I think somewhere close to 50% of stock is held by management insiders and other kind of parties who obviously can't sell or can't really trade. So I don't think there is much of an overhang of sellers from being from very early rounds where people have relatively inexpensive shares. And as I said earlier, I can't see why people would be shorting the shares given the cost of borrowing and the need to find it back again. So I mean, I can only imagine it's long sellers, and maybe we upset some people by doing the private placement. I don't know, but
I don't think that's upsetting at all. I not to interrupt, but I mean the private placement was that's got to be that's beautiful thing to have done right now when you need the money and have it done. So it seems like it placed with one institution that we don't have any to worry about coming back to the market.
So I can't really say who it was placed with, but clearly it was 3.1 million shares in a company that traded about 30,000 shares a day. So any investor, my assumption. I mean, and we had a number of conversations and meetings with the investor over a period of time, and so my guess is they acknowledge that they're in this for the long run, like most of us are.
Good point.
So I don't know. It's difficult to say what's going on. I mean, again, I was kind of surprised myself by what I saw. And again, when we did the IPO last November, we wanted to raise $10 million. The markets were pretty tough last November, and so we were only able to raise 5. And now we've raised the additional 5 we wanted to raise last November. Maybe not quite on the same terms as the IPO, but we've got the money in the bank that we felt we needed. And that now, now we have a really long runway to get these plants finished, get them into commercial production. I point out that our operating cash flow is very low. We don't spend that much money. We've got about sort of 35 employees, mainly in South Africa. And that costs us, maybe sort of $1.5 million a year. And then our leases for our buildings, it's $250,000 a year. I think our D&O insurance is about $700, so that's the next biggest ticket item. So we have a very low cost base. We're very frugal in terms of how we spend money. And again, 50% of the stock is owned by insiders, so we're pretty attentive to kind of dilution and where we spend money and stuff. So having over $5 million in the balance sheet gives us a really good shot now at getting these plants into commercial production and producing large amounts of free cash flow for the company.
Stephen, thank you very much for that one. Michael Zimmerman, you are now unmuted.
Hey, Paul, how are you?
Good, thanks. Yeah, hi, Mike. Good to hear from you.
Good. Just wondered if you could elaborate a little bit more in terms of what you think the revenues and free cash will be for 23 and 24.
So we haven't given guidance, so it's difficult for me to be too precise. But what I would say is that the carbon plant is likely to have a take or pay component to the contract with a minimum floor. We can probably produce more than the minimum floor, but I would say it's going to be low mid-single digit million dollars at a very high gross margin. And then, as I said, we signed a $27 million agreement with RedChip, up to $27 million in revenues a year. That will come on at some point during the second half of the year. We'll grow into that over a period of time, I expect. And then we're talking to a number of other customers for a number of other isotopes that can be produced from the second bigger plant in South Africa. And so, I guess, one of the catalysts, I think, for the next sort of 6 months or so is us signing up a couple of these contracts, and then we'll be able to kind of say, look, these are the contracts we have in place, and this is the revenues we're going to be producing next year, and hopefully we'll be able to do that, over the summer or maybe even sooner. But I wouldn't want to give guidance without long-term contracts in place, if that makes sense.
Yeah, but maybe you could just take the long-term contract you have in place. Is it fair to say, you could kind of talk about that and what that means for revenues this year and next year, and then you just talked about your operating burn, so how you can sort of circle the square.
Yeah, so let's take the RedChip contract, for example. I'm currently talking to RedChip. I'll be going out to China in June. We will be firming up exactly how, what volume commitments they want each month for the next couple of years, and revenues from, that contract comes through at a good margin, kind of better than 70, 80%, that kind of, good margin. And then, as I said earlier, the carbon plant is probably kind of low to mid single digit $1 million coming through again at a very high gross margin. So that should give you an idea of, where we get to next year. So I'd certainly like to think we are cash flow positive next year, and actually we exit 2023 with a positive cash flow run rate. Again, it's going to come down to signing contracts over the next few weeks, few months.
Great, thank you.
Thank you very much, Michael Zimmerman. What is the financing strategy for future plants? Will these require additional equity raises, or can these be financed via cash flow or debt?
Yeah, thanks. So one thing I would point out is we have no debt on our balance sheet right now. We have a lot of fixed assets in our company. So there's a good chance we can get some debt on some of those assets, or support on some of those assets. And in terms of financing strategy, we're not going to build an additional plant without a customer signed up to a long-term take or pay agreement. Many of those discussions are kind of taking place at the moment. We would like to think the customer would come in with some of the cost of building the plant, or certainly make a down payment or a commitment to the plant. So that will help finance it. And again, if you have a long-term contract, with a government or blue chip customer on a take or pay type agreement, it should be pretty easy to get that. What I'd point out is our first two plants are in South Africa. Future plants are unlikely to be built in South Africa. We use a lot of energy, and so we're talking to countries right now about setting up plants in other countries where we have very low cost, environmentally friendly, renewable type of energy that again puts us in an even more competitive position.
Thank you very much. Reminder again, to speak to Paul Mann, use the raise hand button, and to type in your question, push the Q&A button and type in your question. How many plants does the company have in the United States?
So we have 0 plants in the USA. Both our two plants are in South Africa. how we created this company. So, about 2 or 3 years ago, myself and a couple of ex-colleagues or friends met a group of scientists in South Africa who had worked in the South African nuclear program back in the 80s and 90s. And in 94, when regime change happened in South Africa, they were kind of out of a job. And so they started using their skills to try and enrich other isotopes for friendly, peaceful applications. And we found that about 20 years later, for this technology is really interesting. There's a lot of need for this in the world. So they wanted us to invest in their company. We didn't really want to invest in a South African company. So we created a Delaware corporation. We quickly raised sort of $4 million from friends and family, and we acquired the assets for our business rescue in South Africa. So that's why our first 2 plants are in South Africa. We then raised additional capital to complete the plants and bring them to market, and that's the stage we're in right now. But as I say, we use a lot of energy, and so we'd rather not put our next plants in South Africa.
All right, I'll give everyone a moment or two to think of we've got someone with a raised hand. Irwin, Shayne, you are on.
Can you hear me?
I can, yes. Thanks for your interest.
Are your plants individual product plants? And are they expandable? In other words, if for a given product that you suddenly get some major demand for it, is an individual plant expandable, or just to what extent? And also, is it just for each plant for one product?
So we'll likely run one plant for one product, simply because it takes 3 months. A production campaign takes about 3 months to do. So quarterly production runs of individual isotopes. That said, with minor modifications and some changes, we can potentially switch one plant from one isotope to another isotope, particularly if they're similar kind of masses. So silicon-28, carbon-14, oxygen-16, they're all kind of a similar mass. But we probably couldn't turn a carbon-14 plant into something like molybdenum, which is a mass of 100. That's too big a jump. But yeah, so there's some flexibility in terms of being, and then obviously we can expand plants as well very cheaply and very easily. So once the bulk of the plant has been built, adding additional segments in to increase the capacity is actually extremely cheap. So I say the plant can start small and it can grow as demand grows or as demand dictates.
Thank you very much, Irwin. How much capital has been raised to date, both privately and publicly?
We've raised about $20 million to date. 10 privately, 10 publicly.
When you say you use a lot of energy in the plants, can you be more specific? Are you using a lot of electricity or natural gas?
So I guess I say we use a lot of energy. It's probably not a lot of energy versus some other industries, but I feel it's a lot of energy for our footprint of the plant. So, average kind of plant for us is going to use a megawatt, basically. So, I mean, I consider that quite a lot for something that's producing kilograms or grams of product. But I guess, for instance, some of these big industries use, tens and 20s and 50s of megawatts. It's our single biggest item in our cost of goods is energy. And, we have a mixture of, solar, batteries and energy from the grid to supply us with that megawatt. And, we'll do our best to lower the cost as much as we can, be as environmentally friendly as we can. But obviously we can't, there are times where we have to take energy from the grid or use, and actually in South Africa, we actually have to use diesel sometimes because of load shedding. But there are periods during the day where South Africa doesn't have enough energy. And so, the grid just goes blank. So we actually have an uninterrupted power supply unit for a megawatt. And we also have 3 large diesel generators for a megawatt as well. So, our cost of energy in South Africa is a lot higher than it would be in some other countries. But obviously we came to South Africa because that's where the plants were when we brought them out of business rescue. We'll do our best to reduce the cost as much as possible.
Paul, let's wrap up with the essential value proposition. Why should investors take an interest in ASP Isotopes right now?
Yeah, I mean, listen, I think we're entering a really exciting time for the company. Our first plant is now operational. It's enriching product. That'll go commercial during the second half of the year. That would like to go commercial in the second half of the year. Our second plant should be completed, this year as well, and be producing product, hopefully by the end of the year too. So we're in a really exciting time in the company where we go from building these big capex projects, or what I consider big capex projects, where we suddenly start generating revenue and selling products. And so it's a really exciting time for the company, and hopefully you'll join us on this journey.
Thank you very much, Paul. For more information on ASP Isotopes, reach us at 1-800-RedChip. That's 1-800-733-2447. Please visit the investor information page for ASP Isotopes. It's aspiinfo.com. There you can sign up for news alerts on ASP Isotopes, as well as view and download the investor presentation and fact sheet. Please be sure to visit the website of ASP Isotopes. It's aspiisotopes.com. Thanks again to our many participants and your excellent questions today. And thank you, as always, Paul.
Thank you as well.